All right. To the business at hand, you guys. As the name suggests, Fibonacci Friday. We're going to take a look at some fibs. In particular, today I'm going to show you how to use them to trade the news. A lot of times on Fridays, we look at long-term scenarios. I've shown you guys how to use fibs to identify long-term exit points, figure out how much is left to a trend, whether it's worth to get in or not, how to set your target. All of that's still valid. All of that still works. But instead of looking at the daily or the hourly charts, you'll notice today we're on the 5-minute chart. I'm going to show you how to do the same thing, but faster. Because besides long-term scenarios, you can also make use of fibs during news time. I'm going to show you guys exactly how to do it. George, that's awesome. If you were in our pro room, we would call that a fat cat. Anytime somebody makes a triple-digit number in a day, I meow at them, meow, and they get what's called a fat cat award. So good for you, man. Awesome. Alrighty, so what you're looking at is the pound dollar. During news, I like to be down on the 5-minute chart so I can see the immediate reaction to the news. And no, I don't chase the initial spike. That's not what news trading is to me. As a matter of fact, on this one, I got in on the second candle. That means 5 whole minutes after the news. And I got to tell you, that's rare for me to get in so quickly. Many news reports, I end up trading half an hour, 45 minutes, sometimes an hour after the news. However long it takes to set up the pattern I'm about to show you. This is the news candle in question, this guy. Okay? This is when the current accounts came out on the pound during the European session. See, I take all of my examples from real life. I don't teach theory in here. If I show something in here, it's because I was trading it. Real life examples. Thing is, I was watching this thing back here. Okay? This is called a spinning top. You often see this or some variation of it, sometimes a doji like this guy. Or here's one. Okay, I call these guys near dojis. To me, they mean the same thing as a doji. Doesn't matter, no body, small body, slightly thicker body. The overriding characteristic is that the wicks are longer than the body, and it represents indecision in the markets. And you often see these guys at turning points, right? That's where the indecision happens, when the bears start to overpower the bulls. And what gives this particular candle pattern its significance is the open of the candle afterwards. Okay, and I treat near dojis the same way as I would a perfect doji. Meaning that I imagine a center line through the center of the candle, and then I look at the next candle to see if it's above or below that center line. This one's clearly below. It's not below the body, okay, but it is below the center line. So I'm already smelling a downside reversal, even before the news came out. This next candle, here in the West, we call it a hammer. I think you can see why. In Japan, it's called a hanging man. Okay, upside down. Let me see if I can find an example. Here's one. This is an inverted hammer. The Japanese call it a shooting star. Also very commonly a reversal pattern. Okay, here's a great example of a hanging man reversal pattern. This one's a little different, though. We're opening on the next side. Okay, it's still a pretty powerful candle formation. And applying the same rule as before, we're opening bearish relative to it. When you open on the tail side, see, it's a reversal when you open on the head side. When you open on the tail side, usually what price tries to do is cover the tail. And boom, another shooting star, another bearish open. So I remember waiting for this news, and for about 10 minutes before news, I'm itching to short this thing. And I'm just telling myself, discipline, Dre. News is about to come out. Don't get into a trade right before news. Give it just one more candle. This is the self-dialogue I'm having. See, a lot of people think when you go pro, the emotions go away. That is untrue. You still feel the emotions. Okay? They never quite go away. They stay as long as you're human. The difference with a professional is we've got enough experience to act or not act despite our emotions. Whereas beginners tend to give in to their emotions, and all of the technical analysis they've done to that point flies right out the window. You think you're using a trading system because you've done the analysis. But what counts is whether you act based on your analysis in the end or on the emotions you're feeling. So I was itching to go in, but I decided to go ahead and wait for the news. News comes out, and there was a couple news reports that came out at the same time. There's about 4 of them. The most important ones would be the GDP and the current accounts. The GDP came out at 0.7, pretty much exactly as analysts estimated. But the current accounts was at negative 20.7 billion last month. It was anticipated to be at negative 13.5 billion this month. It came out at negative 22.4 billion. Well, guess what? Price is bearish. The open is bearish. And now I got bearish news. Great. I love it when news helps a trade along instead of going against it, right? Because that tends to accelerate things. But here's why I like news. Keep in mind you're trading against the... And these guys pay like 10 grand a month to subscribe to either Bloomberg Professional or Reuters 3000. No matter what news service you might be paying for, there's going to be somebody out there that gets the news a couple seconds ahead of you. And even if you have 10 grand a month to blow on Reuters 3000, what if on that particular news report, Bloomberg beats them by a few seconds? What if you subscribe to Bloomberg and Reuters beats them by a few seconds? So it's a game I really don't care to participate in because I know I'm outgunned. A. B. During news, usually spreads wide. C. During news, usually you get more slippage and requotes. So even if you're right on the trade, you might lose a bunch to slippage, to spread, etc. Whereas a little bit after news, things tend to settle down a little bit. And the thing with spikes is they tend to reverse rather quickly. Imagine you got slipped and you enter down here. And now it's reversing on you. You're trying to get out, but you keep getting requotes. And you can't get out. Or what if you manage to get out at break even, but due to the wider spread, you're still losing money? You see what I mean? There's too many variables. So I could get in here. What if I got slipped? What if I got impaled on the spike? You know what I mean? There's being right, and then there's making money. Being right makes your ego happy, but it doesn't always make your account happy. I've been doing this for a decade and a half. I'm over the being right thing. I'd rather make money, personally. So let me show you how I do this. Okay, I know the point at which news came out. I'm going to label that point A. And this is where this gets a little bit different than the long-term analysis. If I was doing long-term analysis, I'd measure the whole trend, right? I teach you guys wick to wick because we measure distance. But this is a news trade. I'm interested in measuring the reaction to the news. Okay? So red candles open on top. That's why they're red, right? And close lower than they open. So this is where we were at the moment the news came out. The beginning not of the trend, but of the news trend. That's point A. Point B is going to be the furthest point we got to before the first major retracement. And this is why this one happened a little bit faster for me than most news reports. Because we got the retracement right away within that first 5 minutes. That's why we left the long wick. If this were a little more solid, okay, and the next candle opened and kept going down, I'd keep waiting. Now instead of 5 minutes, it's 10 minutes. Not before I trade, mind you, but before I get my point B. Okay, I still need more information before I enter the trade. And this is where you can see, like non-farm payroll, sometimes it takes half an hour to 45 minutes. What if I get 3 candles of down, then I get my point B, then I got to wait 3 more candles before I get my point C? Well, my goodness, 5 minutes each. Now you're half an hour before news. So there's no set time limit. It's however long it takes it for me to see a point B and a point C. Okay? In this case, they happened pretty quickly. Sometimes it takes a couple candles for each. It's valid, Vandermeulen. 10-minute chart, 15-minute chart, but not during news. Fibs work on all time frames, wherever you see a zigzag. But after over a decade of doing this, I'm convinced that the 5-minute chart is the best one to use for news, specifically. Okay, and this is a news trade. General trading outside of news time, yeah. Use it on whatever time frame you like. It'll work just as well. Why the 5-minute chart? I don't really know, other than, after lots of testing, it's the one where I've had the highest hit rate during news. So we had an extension, we had a pullback. That's the zigzag I'm talking about. As you might guess, point B then is how far we got before we had our pullback. Okay, in this case, the bottom of the wick. If there's no pullback and a bearish open, you keep waiting. You wait as long as it takes to have a pullback, whether it's 1 candle or 10, whether it's 5 minutes or an hour. Okay? You wait till you have a pullback, and when you do, you mark point B. I'm getting to that, Carlos. Remember I said entry comes after C. We're on B. If you can't count to 3, you've got no business trading. If you can't wait 5 minutes, you got no business trading. I'm getting to the entry part. Those who enter before they set up a trade tend to lose the trade. I don't like to lose. So let me set the trade up first. Once you have point A and point B, you've got enough information to draw your fib. Not yet enough information to enter, mind you, but enough information to draw your fib. There's one more point needed before you can enter. Analysis is different from entry. A lot of people think I've done the analysis, time to hit the trigger. They get itchy fingers. Entry is always a separate consideration from analysis. In this case, we didn't have to wait very long. Sometimes you do. So let me reach for my Fibonacci tool. There's no wick on top. It starts with the body. But I go down to point A. I press my mouse button down. I'm not letting go. I'm holding my mouse. I go down to the bottom of the wick by point B. And that's where I let go. Okay, now you're looking at this. Remember, I control only 2 points, A and B. The in-between lines fall where they will based on the Fibonacci calculation. In other words, I don't have direct control over them. And yet, look at where these bodies are. Yeah, very nice, Carlos. Aren't we glad we waited a little bit longer? Look at this. And I think what you're starting to see is that even during news, when things seem to be like totally random and chaotic, there's a pattern at play. There's an order to things. It's less Vandermeulen. It's much less than during the first candle. It's usually not completely gone, but it's better. Remember, I said this was an exception. Most news trades, I'm trading half an hour after news. By then, it's gone completely. Because usually it takes more than one candle to get to B, and it takes more than one candle to get to C. It's still there after 5 minutes, but it's much more manageable. So the next point that I need is point C. Point C, very simply, is how far back towards A the retracement came before you resumed the original A to B move, right? Remember, zigzag. Okay, there we go. That's my point C. How far back towards A we retraced. So I measured the extent of the thrust and then the extent of the pullback. Make sense? Let me explain the numbers on the right-hand side here. Because sometimes people get a little confused when they see my fibs. I've heard people say, well, you've got more levels than I've typically seen. That's because you're actually seeing two tools at the same time. Okay, point B, where I let go of my mouse, that's the 0 point. That's kind of where we start from. As we count up, back towards A, this is the percentage of retracement. Okay, it's covered by the red candle, but this is 50%. And if I come over here, yeah, we're halfway between A and B. That's what 50% means. In this case, we retrace to this line, which is 61.8. Or roughly, we retrace 2/3 of the way back. Okay, and FYI, if this was the candle that I was marking my C on, you're tempted to call that 61 because we're closest to it. Actually, point C is the last line that you actually touched or crossed. Okay, so even though we're closer to this line, it's incomplete. We never touched it. We never crossed it. Okay, so had it been the green candle, I would actually call it 50%. This was the last point actually touched or crossed. Okay, it's not like rounding off. You gotta actually touch it or cross it. But in this case, well, there's no question. You know, we went to 61.8. And they could, William. Good eye. Except at this point, I didn't see this yet. Okay, I'm giving it to you as I saw it. Okay, you guys are thinking that because you got the benefit of seeing everything that came after. Okay, you always got to consider what it looked like at the time. No, Carlos, as I mentioned, I made a modification. You're seeing two Fibonacci tools at the same time. Okay, this first part that I described is the Fibonacci retracement. You'll notice all the numbers on this side of 0 are greater than 100 because this is the Fibonacci extension. Okay, you have both tools within MetaTrader or within most charting platforms. All I really did was trick the software into giving me both with a single mouse click. It's a little bit of a time saver. Okay, that's why these numbers are all greater than 100, because they show you how much past B we've extended. And I've actually got on my website in the forum a PDF document that'll show you exactly how to make that change. Okay, here, let me get a link for you. It's got screenshots and everything. Go to that thread, and it's right at the bottom of the first post. There'll be a little fibo.pdf document. You can download, and it'll show you exactly how to make that modification. So all it is a little bit of a time saver. You get two tools instead of one. Now, how to trade it. Right? I showed you how to set up the trade. Let's talk about how to trade it. In this case, my entry came at exactly the same time as I got my point C. Okay? Because, look, we opened bearish, even with a gap down. Furthermore, this closed holding this level as support. This opened underneath it. In other words, support broke. Now we're under resistance. Okay, so in this case, it happened rather quickly. And support giving way and or a bearish open. In this case, I got two. You know, that's one of several entry triggers that I follow. I got the entry trigger the same time as a point C. Sometimes the entry trigger can come a candle or two after point C. What I basically need is some evidence that the original A to B trend is going to resume. Okay? In this case, this was evidence enough. Sometimes you get your point C and it's a doji. right? Remember we talked about doji. So then I need the open of the candle after. Sometimes I get my point C on a green candle, like we talked about over here. And I'll show you this one in a moment. But if it's a green candle and price is going up, and I had bearish news and I'm waiting to short, why would I enter when price is going up? Just to sit in the negative? You know what I mean? So sometimes you got to wait. In this case, it all happened in a row. And Vandermeulen, as I mentioned at the beginning of the webinar, no, it's not always on the 5-minute chart, and it's not only during news. I use Fibs on my daily chart, sometimes my weekly chart, for a lot of my long-term planning. Sometimes I use Fibs on my hourly chart for my intraday swing trades. I'm on the 5-minute chart because I'm reacting to a news report. But Fibs will work in all time frames. It's wherever you see a zigzag pattern. You know, like here's a zigzag pattern. We went up, we went down. Here's an indecision candle. Now we're going bullish. So I know the original trend is resuming. This is a zigzag. I would reach for a fib. One candle, this is the exception. As I mentioned, most news trades can take 15 minutes, half an hour, sometimes 45 minutes before a B and a C form. You know, your A you get right away, obviously, when the news comes out. It's however long it takes to complete this leg and have a pullback. Then I've got my B. Then it's however long it takes to complete this leg and then, you know, reverse to give me indication that the A to B trend is resuming. There's no specific time limit on it. However long it takes to form a B in rebirth, however long it takes to form a C in rebirth. In this case, that gap is what sold me. A, I have a bearish gap. B, the support level that seems to be holding here gave way right away on the open. So this one is the exception. It happened much faster than usual. My stop, great question. My stop, usually, okay, we got our entry identified, the open of this candle. For my stop, I like to go 2 resistance levels up. Now, in this case, I only have the fib on my chart. Okay, usually I'd have a couple moving averages on my chart, maybe pivot points, though pivot points a little less relevant during news specifically. I use pivot points, daily pivots to be exact, for my intraday swing trades. Okay, so usually I'd have a couple more lines. But going just by the fibs, 2 resistance levels above, and then I like to add what's called padding. I don't like to put my stop right on obvious levels. Once I figure out an obvious level, I like to go a little bit wider for my stop, and I'll also go a little bit shy for my target. Why? Because if it's an obvious level, the bank traders are seeing it too. And remember, they're after your money. Okay? So always go a little wider for your stops, a little shy of key levels for your targets. And the way I figure out padding is this, very simple. I take the length of the most recent wick that would go against me. So I'm trading down. I take the most recent up wick. In this case, there is none. I then add my spread, and then I add +1 for good measure. Okay, there's my highly scientific formula. Most recent wick that would go against you, plus your spread, +1. And I add that, not to here, mind you. I go 2 resistance levels away, then I add the padding to that level. So my stop would be probably like right around here. right around the opening to the letter C. And you can see price did move against me from the open, but not enough to take out my stop. That's a well-placed stop. Okay? I don't use a fixed distance. I always make it appropriate to the situation based on support resistance levels. And then keep in mind the padding. Sometimes you use a little bit less padding, like here. Imagine I had this wick. Okay, I would use a lot of padding beyond the second resistance level, mind you, not from the candle open. You can totally change the color, Carlos. Okay, you don't see it here because it's all in one candle, but normally there's a red dotted line that reminds you how to draw the fib. Double click on that red line, and you get these little white squares at each end. You can use this, by the way, to adjust your fib. Just click and drag the white square. But you can also right-click on that, on the square, or on the red dotted line, after you've double-clicked to activate it, mind you. If you don't see the white squares, that hasn't been selected or activated. So first double-click on the red dotted line. Once you see the white squares, you can either drag the white squares with the left mouse button, or you can right-click on it. You get this context menu right at the top, Fibo Properties. Click on the Common tab, the very left one over. Okay, there you go. You can change to any color you want. This is also where you can type in custom fib levels. And by the way, little hint, if you go dash %, it'll show you not only the Fibonacci level, but the price level that this Fibonacci level falls on, which is very handy for setting your stops and targets. Okay? I still don't understand why you guys find this tricky, but let's go over it again. Extension, pullback, resuming of the original trend makes a zigzag. You form the fib wherever there's a... Yes, there was also a zigzag here, Forex Gal. But at the time of entry, do I know this is going to happen? Remember, deal with what you see at the time. Okay? Maybe I should just do it like this. There we go. Let's talk about that green candle that we don't see yet. Okay? We have the benefit of seeing the whole move. But at the time, you don't know what's coming next. You deal with the information you have at the time. And the information I have at the time is I had a move down and I had a pullback. That's my B, that's my C. If the next open is bearish, I expect price to go down, meaning complete the zigzag. Okay, I didn't know there was going to be another pullback at the time. And as scary as it was, here again, it does not take out my stop. Fibonacci, you guys, boils down to this. Measure A to B, wait for C, based on where C is, trade C to D. But remember, sometimes your entry can come a candle or two after C. C helps you set your target. C is not the entry. Okay? You get A, B, C, then you get an entry. In this case, because of the gap, because of support suddenly giving way, I got my entry right at the time I got my C. But it's not always on the same candle. So measure A to B, wait for C, trade C to D whenever you get evidence that the original A to B trend is resuming. Make sense? And we got some common rules based on where C is that tell you where D is going to be. D, Carlos, I showed you the entry. D is your target. Right? We got our entry, we got our stop. The target is the third variable. Okay? Your target is D, and the way we determine that, there's just some common rules. Okay, I'll give you the three most common ones. That's these guys right here. That document that I gave you a link to above will describe all of the other less common levels. But these are by far the three that you're going to see the most often. If your C retraces to 38, more often than not, the move will extend to 130. If your C retraces to 50, more often than not, your D or your extension will go to 161. And if the move retraces to 61, once again, more often than not, it'll go to 161. Those are the three most common ones. And again, visit this link to get the document to learn about all the others. But if you're new to Fibs, start out with the three most common ones, right? First get it down, then make it fancy. So based on this, we're entering here. We got our stop here. Where would we put our target? Give me a price, please. 158 wasn't even one of the levels discussed. Frank, better, 161. But that's not a price. There we go. Good, you guys. And then remember what I said about padding. Don't put your target right at this level. Put it a little bit shy. Okay, fair enough, Vandermeulen. So yeah, this then becomes our point D, our target. And yeah, we went a little bit beyond that. It happens. This is news. It's a very volatile time. The point is, look at where C is, look at where D is. We managed to carve out for ourselves the majority of the move. Okay, we didn't get the very top. We didn't get the very bottom. We got what I call the meat in the middle. That's the majority. It's also the safest part. Gee, more pips and safer. I'll take it. People get so hung up about trying to predict the exact reversal point. And here again, you might get it right once in a while. You might make your ego happy. But guys, the closer you get to the extreme, the more exponentially dangerous it gets. For every one you get right, you're going to get 2 or 3 wrong. It's luck. I trade the part I know I can depend on. Sometimes you end up waiting a long time to get those 2, 3 extra pips when you could be looking for the next trade. Sometimes trying to get those last 3 pips, there's a sudden reversal and suddenly you lose 10. Forget about this little crap at the end. Go for the part that you can get reliably over and over and over again, rather than the part you might get right once in a while. Okay, like I said in the beginning, I don't care about being right. I want to make money. Okay, and there you go. A, B, C, D, your basic news trade. Now, as I promised, real quick here, let me clear some of this stuff off. Let's say I wasn't there for this part. Let's say I took a coffee break or whatever. And this candle happened while I was gone. And now we got this pullback. Well, no problem. Let me slide my point B over. Okay, but watch this. During news, things can happen very quickly. It's the first thrust, it's the first pullback. Okay? Going by the second pullback, it's still a 61, but look what happened. We didn't quite make it to the 161. Okay, but look very closely at Forex Cal. Look very closely at this fib. Remember how the first one looked all nice and neat with all the bodies sitting right on the lines, on the in-between lines? I call that snaps, when things snap into place. Do I have snaps on this fib? Look. Neither the bodies nor the width are snapping to any in-between levels. So that's my first clue that this fib is not reliable. Not useless, mind you. If you caught this reversal, you would have still made money, just not as much money as you were hoping for. It's not necessarily a losing trade. It's just a slightly disappointing trade. But if I go on that first retracement, look again how the bodies are just sitting right on these levels. Okay? Wherever you get the most snaps to the in-between levels, that's usually the most reliable fib. But look at this. Let's measure the up move. Let's try this outside of news time. Is it this? No, sorry. The most recent low to the most recent high. Very important distinction, you guys. It's not always the lowest low. It's the most recent low. That's where you start measuring from. So here's a fib. Here's a zigzag. 50% retracement. Another one that didn't complete, but not totally useless, because here's a clue to get out early. We stop underneath resistance. We failed to break it. Next candle opens as an inside candle, suggesting retracement, also under resistance. You see that? I'm going by the bodies. We just couldn't break through the ceiling. That's a warning sign to get out. Let's try it on a higher time frame. Let me see, where's the zigzag? Here's a good one. Totally different time frame, right? Couldn't be further apart. 5-minute chart to a daily chart. I'm trying to show you like really impressive, perfect examples, but markets aren't always perfect. Draw my fib, check for snaps, make sure it's a valid fib. 61 retracement, you would normally target 161. But here again, evidence of a reversal. Shooting star, inverted candle. We opened on the tail side. And remember what I said about opening on the tail side? We try to cover tails. So this is one where you would set your target here after a potential reversal candle. That's what makes it so special. Candle after that seals the deal. Okay? A fib by itself identifies direction. Okay? Fibs alone give you the support resistance levels. The candle formations relative to those Fibonacci levels are what give you the direction. Make sense? You need the complete picture. Fibs by themselves are just support resistance. Alrighty, you guys, and that's Fibs and news trading in a nutshell. That's how I do it. Let me leave you guys with a couple links. First one, this is a daily newspaper that we publish. Comes out at 8 a.m. GMT every morning. Totally free of charge, you guys. I have these. And then they measure which ones get the most clicks. So it's kind of a summary, not just of the day's news, but which of the day's news is getting the most read, i.e. potential trade ideas, because that's what other people are paying attention to. Totally free of charge. You can either go to that link every morning, or you can sign up and you can have it sent to you, either to you via Twitter or via email. We'll send you a link every time a new edition comes out. Here's my Twitter and my Facebook. If you'd like to follow me, stay in touch. Now, I showed you just Fibs today, you guys, because that's all we got time for. I do use other indicators together with my Fibs to make their signals even more accurate. Confirm changes of direction, help me with the timing of entry, and so forth. All right, Carlos, that's great on the YouTube. You'll get the newest videos. But the daily newspaper is something different. It's reading instead of viewing. So you might want to get on both. To learn the entire system, you guys, what I use in combination with Fibs, as well as psychology, risk-reward ratios, money management, all sorts of other cool stuff, I've got some recorded workshops. You can watch them anytime at your convenience at the workshop link I just posted. You want to go a step beyond that, we've got a live room, you guys. If you found today useful, we do this every single morning. We set up our trades for the day ahead, not just on one pair, but on several trades. And then we meet for a second time at the end of the day to discuss which trades worked and which didn't and why, and what we can do better for the next day. 2 classes every trading day, 10 a week, 40 a month. And it costs less than 1 or 2 losing trades for most people. So ask yourself, do you want to keep losing money, or do you want to make it consistently? Okay, that's the second link for our pro training program. And if you're on a budget, if you're short either time or money, we have what we call our weekly video updates. This is where we just send you a recording of our Monday morning video as soon as we're done recording it. You don't get to ask questions. You don't get to interact. What you do get is our trade setups for the week ahead. Still quite useful. Last but not least, you guys, I encourage you to visit fxknight.com. Most everything on the website is totally free of charge. We've got a free chat room, free forum, free plugins for your MetaTrader, streaming news, interactive charts, all sorts of goodies. The only thing I charge for is my time. Okay, if you actually want to study and interact with me. Most everything else on the website is totally free. And I've had some questions about private lessons outside of the group classes. I do offer private lessons as well. As a matter of fact, we've got a special going on right now, you guys. If you buy 5 hours, I'll throw in a 6th one for free. If you buy 10 hours, I'll give you a 12. Okay, 2 for free. I just posted the email address of my assistant, Sandra at fxknight.com. If you're interested, go ahead and email her. She'll hook you up. Thank you all very much for your time and attention. I really appreciate it. I hope I gave you a couple useful ideas. Open up some historical charts, you guys. Practice first. Get the hang of it. Then open up some live charts. Do some demo trading. Okay? Only risk live money once you really got a hang of it, okay? Don't be in a rush. And if you found today useful, you guys, I'm doing this coming Wednesday, Institutional Trading Strategies, another class I teach. Okay, that's this coming week on Wednesday. If you found today useful, bring a friend with you. All right, share the wealth, help a fellow trader out. Thank you all very much. I wish you a wonderful weekend, and I will see you on Wednesday.